Investors, welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. Let's get it, investors. I am super excited. This is the most excited I have been all year long. I do expect for Q4 of this year to be very bullish, and we have recently just got a ton of bullish catalysts. That's why I am wearing the sunglasses today, because our futures are all so bright I gotta wear shades, right? Well, actually it's because I'm having a little bit of eye irritation, but regardless of that, I am expecting the markets to be very bullish this week. We recently just got some very bullish catalysts, first with the Federal Reserve, as they have officially cut rates once again. So they cut in October and they cut in September. So now we have had 2 rate cuts this year. The next is expected to be in December. And I am seeing some fear online. You know, when Jerome Powell did give his remarks this last week, he said that right now things are a bit foggy. So it isn't clear whether or not the Federal Reserve will cut again in December. But I believe that is just a bluff, because he said something that was more important in that speech that I believe that some investors missed. And that was that the Federal Reserve in December 1st, is going to officially have the reduction of asset purchases end. So just as this reads right here, the Fed plans to restart Treasury purchases in Q1 of 2026. Officials confirmed that asset purchases would begin in the first quarter of the year, ending a period of steady balance sheet reduction that began in 2022. That is massive. We have been following the markets this entire year, and the entire year we have been saying that we are facing the 3-headed dragon of fear, uncertainty, and doubt, which is all around the Fed funds rate, tariffs, and then also inflation. So right here, this is super bullish, and it takes that 3-headed dragon and it brings it now down to 2 fears, which is just around tariffs and then also inflation. So very positive news with the Fed. I think that some investors don't even realize how big this actually is, because this is basically confirmation of the Federal Reserve once again starting up the money printer. And despite Jerome Powell saying that things are a bit foggy right now, I believe that he is bluffing on that, because with what we see here, the restart of Treasury purchases, this is very stimulative, and it shows that the Fed once again wants to stimulate the economy. So we have that, but then we also got the fear, uncertainty, and doubt. So one of the 2 other factors in the 3-headed dragon have some very positive, optimistic news, because the White House disclosed some details of the China-US trade truce. Woohoo! That is awesome to see. So there's been a lot of fear this year with tariffs, and all year long, we have been waiting for these 2 trade partners to make some type of agreement, which they have finally done. This is super, super positive. All year long, a lot of the fear was sparked by tariffs. That's really what sent the markets down to April. But now we have seen this very strong uptrend. We have seen the United States make a lot of deals with a lot of countries. And right now, with our biggest trade partner, things are looking optimistic. And the bears, of course, are always so loud. Even after this talk, we did see a little bit of sell-off. Even after what the Fed did and after these talks of China, we saw some sell-off to finish the week. But to me, that is just short-term selling, and I believe that the macros are presenting a much bigger picture, and that is that Q4 of this year is going to be very positive. So what I was hearing the bears say online is they do expect for Trump to taco out of this, and then, you know, to see him go on Truth Social and talk some trash about China once again. But I do not expect that to happen. And what is different with this situation between China and the United States and all the other situations is this is the first time that they actually came face to face and spoke. So last week we saw Trump and the United States officials and President Xi Jinping talk and the Chinese officials talk face to face, and a truce was made. So both of those factors are huge. And when we do look at the major indexes, there is no denying that we have been on a very strong uptrend since April. And I do believe that we are going to go a lot higher. But some investors online, again, bears, think that we have to collapse. But what I would say in this situation is the trend is your friend. And right now, things are looking more bullish than ever. So right now, yes, we are at all-time highs on both of the major indexes, but we are at all-time highs for a reason, because things are looking very positive and bullish right now when it comes to trade talks, when it comes to the interest rate, and then when it comes to inflation, things are a tad bit high. But if inflation continues to roar and the Federal Reserve is more stimulative like they are showing that they are going to be, well, assets should be rising with the inflation. We also this week have a lot of big news on the economic calendar, but once again, all of this news might be delayed, and that is because of the government shutdown, which has lasted for the entire month of October. So this week, we are supposed to get some numbers around construction spending, the U.S. trade deficit, job openings. Thursday, another day all around jobs with initial jobless claims, and then Friday, more with unemployment. But likely we shouldn't be seeing any of these numbers. As we could see, there is an asterisk by all of these big reports. That is because these numbers come from the Bureau of Labor Statistics, and again, we are in the middle of this government shutdown. But when it comes to the government shutdown, one positive is, although it has been a very long time that the government has been shut down, eventually we will have to come out of this. There is a lot of fear, uncertainty, and doubt around SNAP benefits and other government programs, and we know right now a lot of federal employees are not being paid. Scott Bessent says that food benefits could flow by Wednesday, and I do expect for this government shutdown to end sooner than later. And this is just a little bit of fear, uncertainty, and doubt that the markets are currently facing. But when we get out of this government shutdown, I do believe that it will act as rocket fuel and we will go even higher. And you know, with this government shutdown, it does have a lot of Americans panicked, and rightfully so. If you're not getting food benefits that you normally get, or if you're not getting a paycheck like you normally do, I could understand that fear, uncertainty, and doubt, especially mixed with inflationary concerns of society. But when it comes to the stock market, something just to think about is, even as bad as things look right now, even all the fear, uncertainty, and doubt that we are facing, this government shutdown, inflation, everything else, we need to think back to 2020 and even 2008. In both those time periods, somebody stepped up to save the markets. In 2008, it was the government which bailed out the banks. And then in 2020, it was the Federal Reserve bailing out everybody, bailing out all the debtors, bailing out the markets, essentially, as they did their historic rate cut all the way down to 0%. And in both of these time periods, we saw, after such a massive, scary drop, we saw the markets recover like crazy. Of course, right now we are a lot higher than we were in 2008 and in 2020. And so this year, there has been a lot of fear, uncertainty, and doubt within the markets, but we continue to see the markets rip up. And right now, the same exact thing is to be said. So many bears are thinking that all these gaps need to be filled and the market needs to come down, but things are looking more bullish than ever. And the Federal Reserve once again showing that they will save the markets if they need to. And something else to think about, just when we talk about the laws, dynamics, the fundamentals of actual money now is so broken. So the federal funds rate controls the markets. Essentially, it controls the flow of cash, borrowing, everything like that. So we are in a much different time period than the old days when a dollar saved was a dollar earned. At this point, if you get a dollar, you better invest it, because inflation is roaring up. And also with investments, you could greatly grow that cash. But that is because of the underlying fundamentals of actual money, how money, or I should just say fiat, how the currency supply is manipulated and controlled. And just something that I think is very interesting, talking about 2020, and something else to think about, how the Federal Reserve really does control the markets. and how right now the Fed is buying assets, or they're going to start buying assets once again, buying all the bonds and everything in 2026 and bringing down the interest rate. When we look at what happened in 2020, so since March of 2020, the Fed set the new reserve requirement ratio to 0% for all depository institutions. This means that banks are not legally required to hold any reserves against deposits. So now the banks are not required to hold any of your money. So when you deposit $100, $1,000, $100,000 into Wells Fargo, Chase, any of these banks, they don't have to legally hold any of it. We know always the banks have been, investing our cash. So we know that bank runs are a scary, volatile thing because of this reason. But after 2020, they don't even have to legally hold any of it. And you know exactly what the banks are doing. They are investing that money. So things for investors right now are looking very positive and bullish. And that is why I am always talking on this channel about investing, because right now we are seeing inflation be a bit high. We are seeing prices rocket up, right? In both the consumer market, so if you were just buying from the grocery store, but also in the asset market. And with what the Federal Reserve is currently doing, investors that are investing right now should feel very blessed in 3 to 6 months to a year because of everything we are seeing with the monetary policy. That is on a long note. On the short note, with what we recently just saw from these macros, I do believe that the dip that we saw to end this last week is just a setup for a much bigger rally towards the upside. And we also this week have a lot of different companies that are reporting earnings. And so we have all of this rocket fuel to also help push up the markets. And that is Palantir reporting earnings on Monday, a massive player, one of the biggest companies in the markets right now, one of the most watched companies. And with Palantir, this is one of the stocks we cover because it is a great growth company with constantly accelerating orders in terms of revenue. They also just had a big partnership with NVIDIA on Tuesday. We have one of my favorites, AMD. I am very excited for this earnings. They are expected to also have a large earnings on Tuesday. We have Robinhood on Wednesday. We have the quantum player of IonQ, and then some of our favorite small caps on Thursday, D-Wave and SoundHound. We also have MP. So we have MP Materials reporting on Thursday also. All of these companies could help to push up the markets, especially the larger caps such as Palantir, AMD, and Robinhood. So I'm very excited for this week when it comes to the earnings calendar. Basically, all of my favorite companies are reporting, and we have some great opportunities presenting in front of us. AMD is one of my most bullish convictions, and with AMD, I do expect for them to either meet expectations or more than likely exceed expectations. And I do believe that we could see a big rip up in AMD on Tuesday with the support of everything we are seeing with the macros. If the government shutdown somehow ends before that or by Tuesday, and then just with all the recent announcements of AMD, it does appear that we are building a pattern up. And in this level that we were recently at, it does appear that we just finished a ascending triangle. So recently we've seen a lot of bullish momentum in AMD. This is kind of my pick of the week, but I am also very excited for D-Wave Quantum, which is reporting their earnings on Thursday. With D-Wave, we recently did have a big retraction down by about 40% from that top, but we have started to see a recovery, and we may be seeing a bullish cross on this MACD, especially if we do see a positive earnings in IonQ on Wednesday. The other quantum play, when any quantum play pushes up, it tends to run the sector up together. And then on Thursday with D-Wave's earnings, if we do do see this bullish cross on the MACD. We could elevate back up on levels on the relative strength index, and then of course on the candlestick chart, and I could see us returning back to the $40 range for QBTS. Who else do we have on that economic calendar? Oh, and then Robinhood on Wednesday. Man, I'll tell you what, I am so excited for Robinhood. And when we just talk about the trends of society, you know, I believe that everybody should get into investing. Robinhood is such an easy platform to onboard onto for most beginners, but with everything that is happening with inflation and then again monetary policy, what the Federal Reserve is about to do, I believe that stock investors are going to be very happy again, as long as they hold through any short-term moments, because in the long term things are looking very bullish. And Robinhood, one of the stocks that I am most bullish on. I have options contracts, I have a long-term investment in Hood, and I also play short-term trading and swing trading in the double leveraged opportunity of ROBN. But this is a blue chip company, recently joined the S&P 500, and there is a ton of volatility in Robinhood. There is so much price movements every single day, a lot of volume within this company, and we have been on a very predictable trend all year long with a rising support and resistance. We are going into that earnings on Thursday. Currently on the relative strength index, we just had a bounce off of the level right around 40, and then it does appear that we may be seeing a bullish cross on the MACD. And again, all macros are looking very positive right now. Some of the bears online are concerned about a taco once again from Trump, but I do not expect that, because we just had a face-to-face meeting, which is so different than just a phone call or Truth Social posts or texts, right? So pretty big news that we recently got with the trade talks. The Federal Reserve is stepping in, so the Fed is our friend right now. I do believe we are going to hear the saying a lot over the next months: don't fight the Fed, because even though Jerome Powell was a bit iffy on what he said things are a bit foggy, we must remember that the federal chairman is always under a lot of scrutiny, and he can't just come out and be too dovish or hawkish and spook the markets either way. But the bigger part of Jerome Powell's speech, what I really caught in there, was when he did talk about the reduction of asset purchases ending, and how in 2026 Q1 we will get the Fed officially buying once again. I am so excited for this week. I do expect a lot of green, but remember everybody, nobody has a crystal ball. In the long term, I am very green. In the short term, there could always be choppy movements, or we could always get some bad news that shocks the markets. But I am preparing myself now for everything that is coming for the rest of 2025 and into the next year. I'm super excited, but I would love to hear everybody else's sentiment. So please, in the comment section below, please drop a comment. Please let me know what you think. Please let me know if you are excited or if you are a part of the Bear Squad. Also, please leave a like and please subscribe to the channel if you haven't already done so. I thank you all so much for being here, and I will see you in tomorrow's Daily Talk of Stocks.